What's up YouTube, Eric here. I've got 5 stock picks for you today. Now it's a blend here. I've got a spec stock, I've got 2 high quality dividend paying stocks, a hyper-growth SaaS stock, and a mega cap tech stock. I'm gonna provide reasons why I think each stock is a buy now at these levels and lower. And this is a rapid fire type video, but it's filled with information. If this kind of thing is helpful, make sure you subscribe to the channel. So the first stock pick is Google, and I prefer the A shares, which is GOOGL. Now they have about 90% market search, so they've got a monopoly on this. There's a lot of buzz right now about ChatGPT, Bard AI, and I've covered this topic very well on the channel. There's a couple different videos I've covered. Make sure you subscribe and check out the other videos. But I think longer term that Google is going to be just fine. They're an AI company. There are definitely pros and cons with how Microsoft and Google are doing their AI chatbots. But if you look at Google, right, Bard AI has an advantage over other AI platforms such as ChatGPT in terms of the depth and range of information it can access thanks to Google's enormous data collection. Now I understand why the stock sold off because that's Wall Street and that's how it works. But I think this is an opportunity back under $100 a share. They have huge profit margins, and you think of the ad market, guys, of course that's cyclical, and things slow down when things get tough. People cut ad budgets. That will come back with time. Google has also been tightening its belt with layoffs and other cost savings, and I think in the next several quarters you'll start seeing some benefits from that. Over the last year, Alphabet's also repurchased 433 million shares of their stock, spending $43.9 billion on buybacks, and that's just in the last 9 months. Another reason to buy Google stock is Google Cloud Platform, and they're third place behind Amazon Web Services and Microsoft Azure. But Google's doing some great things in cloud as well, and there's a huge future and a lot of total addressable market left in this space. In addition to Google's search and cloud businesses, Alphabet also has several moonshot projects. When you think of their drone delivery, we think of Waymo for autonomous driving, and the stock trades at a discount to the S&P, not by much, around a 21 P ratio, where the S&P 500 is about a 22 P ratio as of today. So when you think about the growth and the opportunities ahead, I think it's a buy here, especially if it goes lower. The second stock, ASML, and they have a monopoly on a critical segment of the semiconductor sector. Their high-end EUV machines cost between $150 to $200 million. And when you look at their future equipment for the 1 nanometer technology, you're talking about $400 to $500 million a piece. And although semiconductors are cyclical by nature, ASML has been more steady than average, generating stable growth over the last several years. Its pricing power affords substantial margins, and I think that's only going to increase over time. Of course, in the headlines, you hear about Chinese ban and the impacts, and I think that those are a little bit overdone. If you really dig into this, I'm not sure ASML will be impacted as much as a lot of people think. And the reasons I say that is EUV was already banned under the Trump administration in 2020. So when you look at what ASML is selling to China, it's more the DUV systems, not the high-end EUV. And those are not banned. It's not part of the advanced chips that the Biden administration recently banned. And the CEO even said it right from the horse's mouth. He said that the latest US export bans against China would merely have limited impact on system shipments in 2023. Now this trades at a 44 PE ratio, and that is a little bit expensive, but for a good reason. People are willing to pay a bit of a premium because this does have a monopoly in its space. And it also pays a 1.49% dividend yield. Before I go on, guys, please subscribe to the channel and click that bell to get notifications. I'm trying to grow this channel to over 40,000 subscribers in 2023. You can help me out by clicking that subscribe button right now. Number 3, guys, is Texas Instruments. The ticker is TXN, also known as TI, mainly sells lower-end analog and embedded chips for automotive, industrial, personal electronics, communications, and enterprise markets. So this is a completely different space when you think of NVIDIA and GPUs, and these cost less to manufacture than those high-end GPUs, but they're still very essential to the ecosystem. They support critical wireless and power management features that are needed in all the devices that you use. They have a strong balance sheet, 19 consecutive years of dividend increases. That's a 25% compound annual growth rate from 2004 to 2022. And they've also had a 47% reduction in share count from that same period from doing buybacks. TXN also has a reasonable valuation. It trades under a 19 PE ratio. A great dividend, 2.8%. And they're also expanding their fab production in Texas. And I think this could be huge. Check out this chart. This is showing you all the new semiconductor fabrication facilities in the United States. And you can see Global Foundries on there, Intel. Look at the very bottom, Texas Instruments. So 4 phases, $30 billion of investments, and that's completed in 2025 and onwards. Location, Sherman, Texas. I think this could be big for the future of the company. Now, before I go on, guys, I need to announce that this video is sponsored by The Motley Fool. And if you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community in our Discord by visiting patreon.com/firedupwealth. Number 4 is Bill.com. So why did Bill sell off so hard? It sold off really hard after its recent earnings report. The main reason is Q4 guidance. It was better than expected when you look at the analyst estimates at 168.4 million, but it only showed 10% growth. Now, of course, this is a hyper growth stock and it was very expensive, so it needed to sell off to kind of revalue that valuation. It was trading around a 50 price to sales, but based on future projections, it's now closer to 10 price to sales, which isn't cheap, but much cheaper, of course, than 50 price to sales. The last report showed strong organic growth, rising 74%. Another reason to buy Bill, revenue jumped 179% to 166.9 million. That was following acquisitions of Divvy, an expense management software company, and Invoice to Go, an invoicing and expense tracking tool for SMBs. So these guys are focused on SMBs, that's small and mid-sized businesses. And SMB is more impacted, but it will come back. But that is the short-term risk right now. I prefer this stock closer to $75, but that might not ever happen. Under $100 is reasonable if you're thinking about a 5-year plus holding. So all these stock pick guys, I'm talking about long-term investing, dollar cost averaging. This is not trading. This is buying stocks, buy and hold as a long-term investor. I'm really excited about this last pick, so stay tuned. Now, before I go on, if you like this sector, the space sector, on February 17th, I'm releasing a 77-minute exclusive video on Patreon, and you do not want to miss this one. Join a leader higher to watch this as well as 15 other exclusive videos. So this fifth pick, guys, is Rocket Lab. Now, this is very speculative. It's a young company. It's a spec stock. This is a solid 10x or 0 type play. So when I say spec, it's one of those that you're investing really on a story, potential that something could happen in the future. It doesn't have strong fundamentals. It's going to be more of that story type of a stock. It's very expensive, and there's speculation that it will be successful. But I can think of a lot worse specs than Rocket Lab. Now, Rocket Lab is focused currently on launching small satellites into space, but they are investing to expand to larger launches. And on this exclusive video that covers space exploration, we've identified 10 major segments for the space sector. The primary one's really going to be launch. And when you look at the companies that are in that launch segment, it's really dominated by SpaceX, which is private. So Rocket Lab is a small player. They're expanding into other related services such as satellite manufacturing and components as well. And Rocket Lab is a potential long-term winner as the commercial space race heats up. Now, since SpaceX is a private company, this is the best stock that you can currently buy that's laser focused on launch, and that's publicly traded. The valuation is also reasonable in comparison. Of course, SpaceX is its own giant, and it's hard to compare the two. Now, this is a couple days old, so it's a little bit higher than this. This is information that I posted in Discord a few days back. And at that time, the market cap on Rocket Lab was about 2.25 billion. It traded around 11.5 price of sales. I'd love to get this stock closer to 10 price of sales or under, maybe even 9 price of sales, closer to that $2 billion market cap. In comparison, SpaceX is a $150 billion market cap. And of course, SpaceX is the top dog, but the total addressable market here is massive, especially if you're looking 2030 to 2040. This is very early innings here. So this is a 2030 to 2040 type of investment, very long-term, high risk reward, but this could easily be a 10x or more. It could be a 100x if things play out well. Now, this information was posted in Discord several days ago. I encourage you, if you'd like to join us, go to patreon.com/firedupwealth. You can join our Discord. You can see all this in real time. So in Discord, I've got granular channels, and one of those is Eric's watch list. And this is a screenshot from that channel a few days ago. And there's other channels sharing the stocks that I buy in real time. The community portfolio buys and sells. Even the community itself, the members share their buys and sells in real time. We also do a tremendous amount of due diligence in there. Great conversation and camaraderie, 50 plus channels. Check it out, patreon.com/firedupwealth. And I hope this video was helpful, guys. If it was, make sure you subscribe, click that bell for notifications, drop a like and comment. Have a great rest of your day. Take care.